Not always easy to call the correlation between the DXY, the dollar, and interest rates. Generally, they go up and down together. Now, for the DXY, we've flushed a very small support zone. You can see, look, we've just gone up higher highs, higher lows for weeks, months. Very impressive stuff. You know, a lot of people didn't expect that once we'd flushed this 100 level. 100.8 was very critical support, in my opinion. We just flushed it. And honestly, since then, we just recovered and kept going. Um, we had rate increases continue. The yields have kind of gone up also. They've generally gone up anyway, non-stop since the bear market has started. So, but at this point here, you know, we started to hover. I thought we'd come back down to 104.5. We've started that, but we've had a small, you know, retrace of the flush, a bit like here. Now, I don't think we're going to go all the way up. I think what should happen is we just sort of go sideways and go back down again. However, if we look at yields, and yields have come down, right? The story there is that now the investment world in general are of the opinion that yields will no longer be going up, at least for this year. We'll see. Some people think already next year they'll be cut. So maybe the increase in yields is over. Now, for me, ultimately, that's decided by the 2 year this year. If this keeps going up, there will be more hikes because the Fed tends to follow the 2 year, right? The Fed never wants to go against what the market expects, and what the market expects is what the 2 year creates. So if the 2 year, and you can see the 2 years come down, generally look at the 5 year come down straight to support. I think the support is more obvious on the 5, the 10, to some extent the 30. You know, it's not very, very clear cut, but generally we've come back down, and that's because people are of the opinion that the rate increase is over. However, we've bounced the last 2 or 3 days, right? Look at the 10 year, 2 or 3 days. And now the question is, do we get, well, we will try to test that 5% high because people think 5% is the top. And do we fail there, or do we make new highs on the 10 year, on the 5 year? Same thing, 5 year, look at that 5%, and it went back down again. You can see the 5 years are actually outperforming the 10 year. 10 years outperforming the 30 year. That has not been the case recently, but it's just something sort of when you zoom in that you can tell. And the 2 years outperforming the 5 years. So the question is, will interest rates test their highs, their prior highs from, let's say, middle of October? And if they do they then fail, roll over? We've got a double top and we go back down again. And then, yeah, the Fed stops raising rates for now, and then it just holds it where they are, which I still think is too much for the market to handle. But, you know, do rates stop going up in the markets and in the Fed decisions, the FOMC decisions? And then next year, let's see, maybe there are cuts. I think the whole economy will unravel next year anyway. But if they do go up, does the dollar follow? Because yields and the dollar generally go up together. But, you know, technically, when you look at the dollar, it should sort of level off here. We've just flushed some support, but we are closing back above support. So, you know, it's just going to be interesting the next couple of trading days, not Monday straight away, not even for next week, but the next 1, 2, 3 weeks, basically till the end of the year. It'll be very interesting to see, as it always is, but in particular, the dollar and yields. Do yields make new highs? Do they ever get to test 5%? And if they do they break out, or do they create a double top? And I think that will give some massive clues for like the next 6 months of trading, at least in resources and elsewhere, commodities, and the stock market, of course. So it's just something to pay attention to. For me, the yields where they are now, can they get to 5%? And if they do break out, or do they fail to get there and then just basically roll over and flush? And if we do, the dollar should follow. I don't know, is there a panic in the markets and everyone jumps to the dollar? Lots of moving parts, but on the dollar side, it should really go sideways and roll over, but maybe yields drag it back up. I don't expect this kind of a move if we do go back up, but you know, if we do start to take out 107, close above it, next resistance, well, I've marked all the resistance points. There'll be a little pit stop at 108, but basically 110, right? This 109.5, 110. And then where are commodities? And where's the market? Anyway, that's my 2 cents. I like to group the dollar and yields together. I'm trying to separate my videos. Obviously, they affect all sectors, so commodities, stock markets, but I thought they made most sense together there. So Let me know your thoughts on those two actually.